Welcome back to Explain the Charts. Today, September 16th, 2025, we're putting Meta Platforms, ticker symbol Meta, under the microscope for a detailed examination of its recent news and technical chart data. The market is buzzing with anticipation as Meta gears up for its annual Meta Connect conference, set to kick off tomorrow, September 17th. Crucially, recent news highlights a positive EU court ruling on September 10th, providing significant regulatory relief and likely reducing future compliance costs for Meta. This positive sentiment is further bolstered by a new $100 million AI partnership with Black Forest Labs, reinforcing Meta's aggressive push into artificial intelligence and its metaverse roadmap. Investors are also keen on the upcoming launch of advanced smart glasses, internally codenamed Hypernova, or Celeste, expected to retail around $800 and feature hand gesture controls. While some analysts, like Bank of America, have a bullish $900 price target, others like JP Morgan raised their target to $735 with an overweight rating, suggesting a more tempered but still positive outlook. The stock is currently trading around $768.54, up slightly today, reflecting a generally positive market response to these developments. Now, let's turn our attention to the daily chart to visualize these trends and assess Meta's long-term price action. Looking at the one-day chart, we can clearly observe Meta's strong upward trajectory since May 2024, confirming the rising channel mentioned in recent financial reports. This sustained uptrend has seen the stock climb from the mid-400s to its current levels, demonstrating robust investor confidence over the past year. Specifically, if we zoom in on the period from late February to early April 2025, we can identify a notable pullback where the stock dropped from approximately $740 to $480, only to find strong support and rebound. This bounce back confirms the strength of the underlying bullish trend, with buyers stepping in aggressively during dips. Currently, Meta is consolidating near the $755 level, as highlighted by news outlets, indicating a period of indecision or accumulation before its next major move. Immediate resistance is identified between $780 and $790. A critical zone that includes the upper boundary of its rising channel and is not far from its 52-week high of $796.25. On the flip side, strong support lies within the $736 to $720 range, with the 100-day exponential moving average, or EMA, currently situated near $705, providing another significant technical safety net. Transitioning to the one-hour chart, we get a closer look at the more immediate price action and recent volatility. Focusing on the period from early September, we see prices fluctuating around the $750 to $765 range. Notice the sharp dip on September 8th, where the price fell from around $766 to $752 within a few hours, showcasing short-term profit-taking or market jitters. However, this was quickly followed by a recovery, demonstrating resilience in buying interest. The news of the EU regulatory relief on September 10th likely contributed to the positive sentiment leading to recent gains, despite some intraday fluctuations around that time. The subsequent strong upward movement on September 15th brought the stock from approximately $758 up towards $774, signaling renewed bullish momentum ahead of Meta Connect. Now, let's narrow our focus even further to the 15-minute chart to capture the very latest trading dynamics, particularly from September 11th through September 15th. Here, we can clearly see the stock consolidating around the $750 to $755 level in the days immediately following the EU ruling. Then, on September 15th, there was a noticeable spike in volume accompanying a solid price breakout, pushing Meta to fresh highs around the $770 mark by the end of the trading day. This short-term rally suggests that bullish momentum is building, likely in anticipation of positive announcements from tomorrow's Meta Connect conference. Traders should watch for sustained breaks above this $770 level, especially if accompanied by high volume, as it could indicate a strong continuation of the rally. In terms of bullish catalysts, Meta's strong AI integration across its platforms, the upcoming smart glasses launch, and the recent EU regulatory relief are significant tailwinds. The dividend declaration also signals financial strength and commitment to returning capital to shareholders. The Meta Connect conference on September 17th is the biggest near-term event, with expectations for concrete details on AI scaling and metaverse strategy potentially sparking a rally. However, bearish considerations include Meta's high valuation, with some critics pointing to its price-to-earnings and price-to-free cash flow ratios being rich compared to its projected growth. Broader geopolitical risks and other potential regulatory pressures could also act as headwinds, even with the recent EU relief. To recap the important price levels for Meta, keep a close eye on the immediate resistance zone between $780 and $790. A decisive break above this range, ideally with strong volume, could propel the stock towards the $820 level, as suggested by some analysts. Conversely, key support levels to watch are the $736 to $720 cluster, and below that, the 100-day EMA near $705. If the stock fails to hold these supports, it could signal a deeper correction. Our unbiased prediction suggests a 60 to 70% likelihood of Meta seeing a breakout towards $820 if the Meta Connect conference delivers compelling product or AI updates. However, there's a 30 to 40% chance of consolidation or a pullback to the $736 to $720 support if the conference falls short of expectations or if overall market sentiment shifts negatively. Beyond Meta Connect, monitor trading volumes for conviction behind price movements, and keep an eye on broader tech sector performance and any new regulatory news. Understanding these dynamics will be crucial for timing your trades and setting your price targets. That's all for today's in-depth analysis of Meta stock. Remember to trade wisely and stay informed.